of your analysts have said, it's a rate hike that is based on rebasing. And there's no economy in the world that has dealt with inflation by rebasing. So that is it's a very peculiar situation we are finding ourselves, whereby when dealing in inflation, this time we are not used to the orthodox trend of reducing hiking interest rate, reduction of liquidity and others. Rather, we are seeing rebasing for the first time being a tool to reduce inflation in Nigeria. For me, it's very, very awkward. But again, there's nothing wrong with rebasing. But like I keep saying, rebasing that does not bring food to the table of the ordinary Nigeria and does not drag investors into this country is just economic magic.
Right.
So we need to begin to think of how to drive our economy forward rather than just looking at rebasing.
Why did you say that's awkward? Why is it awkward?
Because there's no economy in the world whereby to drive down inflation, you do rebasing. There's no economy in the world that has done that. Rebasing is not a tool that deals with inflation. So that's why I'm saying it's awkward, because you are using rebasing as a tool to deal with inflation. You see, if you look at that NBS report, food inflation is still high, exchange rate is still high, cost of living is still high. There's nothing that has come down based on that. So the only thing that has come down is the total inflation figure because of rebasing. So rebasing is not a tool that brings down inflation. Rebasing is a tool for you to see more new advancement in the economy, and how that advancement can attract new investors to grow the economy and create growth. It is the first time we are seeing the noise about rebasing all about reducing inflation. It's not a tool that helps to reduce inflation. It's a tool that identifies new areas in the economy to attract new investors, not to bring down inflation. Because in reality, you said inflation has come down by 10%. Food inflation has come down from high, but that's not true.
Muktar,
You just need to go to the market and then you realize that nothing has happened.
If I understand you, this is just a charade. This is just numbers. It has no real impact on the average ordinary person in the country. So what would you say the immediate impact of this decision is?
We have seen the immediate impact from the CBN Monetary Committee. I mean, they've decided to hold rate for a time. They want to do the wait and see how this rebasing will help stabilize the economy. Will this rebasing help attract investors into the economy? We're already saying that that foreign investors love coming to the Nigerian economy because of the risk-free nature in terms of our treasury bill or our euro bond. But with this rebasing now, that means fixed income space has gone a little bit low. The return on fixed income are low, so you cannot attract those kind of investors again. That will help you also bring in those effects that is required to create stability in the exchange rate. I say it over and over, and I stand to be corrected. Whatever we are doing now that does not bring down the effects, that does not bring down exchange rate, is just a measure that will definitely not be able to sustain the economy.
And that's pretty worrisome, because, you know, a lot of people want that to happen very quickly, in fact. And with Nigeria's inflation rate still standing at 24.48 after rebasing, how do you see the CBN juggle the need to control inflation and still spur economic growth at the same time?
You can see that from the monetary committee meetings. You see that they were taken aback by it, because until recently, even globally, we have to understand that inflation would end the year at about 34%. And all of a sudden, through rebasing, now we are seeing that inflation has taken a backseat. So they're also taken aback by it. You can see it. That's why, for the first time, there seems to be no movement. They want to see how that will plan out in the economy. Will it be able to attract foreign investors? The key driver of Nigerian inflation is FX. It has the FX, foreign exchange. As long as we don't stabilize that rate, because over 70 to 80% of what we consume, we import. So we need to stabilize that space. And once we stabilize that space, then definitely cost of goods and services will come down. In a situation whereby you are bringing inflation to rebasing, by saying inflation has come down by almost 10%, and the Nigerian Port Authority is already hiking import fee almost by 15%. How do you comprehend that? So going forward, I think the CBN have their work cut out. Remember, the budget also have been increased, and so there's going to be a lot of liquidity in the system. That's a tool that CBN will want to use to drive down inflation. But again, when you drive that inflation in Nigeria, when you reduce liquidity, you kill one of the most vibrant sector, which is the informal sector that's largely driven by liquidity. So the CBN have their work cut out, and I think that is why they just decided to wait and see what happened after this rebasing.
And Muktar, it doesn't also help that we don't produce much, does it? We import and continue to import. Thank you so much, Muktar Mohammed, an economic analyst, to speak to us on the implication of MPC rate being retained the first time in 3 years. Thank you.